there, people from around the world, my space secrets. It is Tuesday, 22nd of September 2009. Hope you're all going very well today. Lots of things have happened since the last update. Gold's come down a little bit, but like I said, gold longer term is a sure thing, a good winner. If you go back a few years from now, I remember talking to the neighbor over the fence saying that gold is going to go sky high levels, and he thought I was an absolute loony. You were thought back then, if you talked about $1,000 an ounce gold, you'd be put in a dunce corner and told you're a total jackass. But not only did we go through the $1,000 levels, we went up a little bit higher. I do expect a little bit of a retracement in gold now. September on the charts, if you go back, I've actually gone back 60 years from 2009. September and October are notoriously known to be bad months on the market. Yet, since the very start of September, the 1st of September, we've hardly had any red days. Now, while we do believe that to be the case, October could bring some troubles in the next couple of months. We've gone up on this huge, big, faked up rally, and if we go back in history, October is notorious, very notorious, for weakness to come back into the market. So eventually next month we do see some sort of weakness come back into the market. But even if the market does go higher, people really don't believe in this rally. And a lot of people don't understand how the market works. There's a lot of fund managers at the moment sitting on the sidelines, because they didn't believe the rally could go any higher, and we're just waiting on the sideline for a perfect opportunity. Now they're sort of sitting there going, I don't know what to do, and it really brings about what I term, the curse of the crash. What happens after the crash? Because there really are a lot of people that don't trade for themselves, that just put their money into a fund, and they're saying the stocks are at year ago levels. They're up at 11-month highs, but why isn't my portfolio increasing? I've given this money to these people to manage, but they haven't made me money in the last 12 months. Well, the explanation for that is pretty simple, and it has to do with what I just explained before. Because in 2008 you had the lows in November 08, and then in March of this year we basically had a huge rally that by rights should have had many investors back on their feet again financially. And like I said, the main reason why these investors haven't capitalized is really basically because they remain unconvinced that the rally, or this rally, is for real, and they haven't participated in the metric run-up. The main reason why some of these fund managers are on the sideline, and people who trade for themselves, is the whole way through you keep hearing people saying, it's not going to last, it's a bear market rally, we're going to go down again. But the Fed, the government, keeps putting money and pumping money into the markets. So yes, the market has been up big, but the average portfolio fund manager hasn't been along for the whole ride because they don't believe in the rally. And another reason too, another curse of the crash which happens after, is basically safety comes out of the market, where a lot of investors get scared or have fresh memories of the rampant fluctuations that happen in the market, thinking as soon as they put money into the market they're going to get burnt straight away. And the higher the market goes, the more these emotions play with people. And you want to know the worst thing is, some of the fund managers, even here in Australia, have friends that have lost over $400,000-$500,000 with a fund called Storm Financial. When you ring up these people, I've rang them up personally and asked about their stop loss strategy, they say, what is a stop loss strategy? Insane. So they were trading in the market with no protection or money management in place. Absolutely stupid. But a lot of these managers are basically scared to death of what's happened the past couple of months. The average fund manager out there has been investing on what they think the market should be doing and not trading what they're seeing. Anyway, it's going to be an interesting couple of months. There's a big day on Wednesday when the Fed prepares to announce interest rates, so it will be an important event this week. As we have always said, even years back, that there is an inflation risk that will soon come, not just in America, the entire world. And when you go shopping, when you're buying things like it doesn't matter anything from the shops, you're probably already noticing the prices of things starting to increase. But I feel that we're not really even in the beginning stage of this, which is actually pretty scary. And also, beside the point that we're actually also watching the commercial real estate, which I think is the next big bubble to burst. We're going to start hearing a lot of news come in the mainstream media, so we'll keep a close eye on that. If you think the residential foreclosures and problems in that area were big, well, wait till you see the commercial real estate dramas. Anyway, thank you very much for watching and subscribing. Feel free to rate this channel and add your comments below. Thanks once again. If you would like more information, you can go and check out our site. It's in the description on the right hand side. That's it for today. Thank you again. Enjoy your day, enjoy the video, and I will talk to you all very soon. Ciao.